The best of Money Matters.
Market View on Money FM 89.3.
You're listening to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian. We'll take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares began the day in the green ahead of a shortened session due to the Chinese New Year holidays. Now, in early trade, the Straits Times Index was up 0.8% at 3,827 points after some 30.8 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI closed up 0.11%. We're looking at 3,801 points. In terms of value turnover, that's 904 million Sing dollars. Now, gainers outnumbered losers, 249 versus 186. Top advances for today, we've got here DBS, Multicam, and Shangri-La Hong Kong dollars. And top decliners, UOB, Semco Industries, and Yangzijiang Shipbuilding Sing dollars. Now, in terms of companies to watch, we do have for you DBS after the bank announced yesterday that it acquired an additional stake in Shenzhen Rural Commercial Bank, increasing its stake from 16.7% to 19.4%. Now, elsewhere, from how Nvidia lost nearly $600 billion in market cap overnight after the rise in Chinese AI firm DeepSeek caused a meltdown in US tech counters, to the impact of DeepSeek on Singapore's data center Reits. We've got more international and corporate headlines in focus. And joining me on the line is Desmond Chua, investment counselor, Citigold Private Client at Citibank Singapore. Desmond, welcome.
Hi, thanks for having me.
Great to have you on board with us. And Desmond, let's start with the US this time around. We saw a meltdown in US tech counters overnight. NASDAQ down 3.07%. And notably, if we looked at Nvidia, shares nosedive 17% in the session, resulting in a wipe up of nearly $600 billion in market cap overnight. That is the biggest we've seen for a US company, given the rise in China's DeepSeek, of course. So how would you read into the sell-off overnight? And are investors just waiting for a reason to sell? And if so, how long would that sell-off last?
Well, I think investors reacted instinctively by, what they call selling first and ask questions later. And after all, I think given the run-up over the past 2 years, and now we have this, I think naturally, who wouldn't be afraid, right? So regarding this sell-off, it does look like there was some capitulation in the tech counters last evening. So I hazard a guess that this sell-off will be very short-term. I think more importantly, for long-term and patient investors, such periods of volatility are really the best opportunities to really sniff out the leading companies which have been indiscriminately sold off. And it's really the best time to add these sort of companies to their portfolios at attractive valuations.
Okay. Just a curious question, Desmond, as a follow-up. How should we read into the rise of DeepSeek? Because if we go by an Nvidia statement out overnight, it said that the advances we saw with DeepSeek's technology shows that the chips targeted for Chinese markets, Nvidia's chips for Chinese markets, are useful. So should we read into the rise in DeepSeek as it changing the rules of the AI game to compete by cost versus sophistication? Or should we read into the rise in DeepSeek as sort of opening up the Chinese market to other conventional chip makers?
I think large language models like DeepSeek, LLMs, are, supposedly costly to build and train. But I think over time, eventually, like with most technologies, they will commoditize. So let me use an example here. The computer used to be a huge mainframe that you had to put into a gigantic room. And back then, only companies could afford these mainframes. And then after that, we had the PC revolution, where we have a desktop in every home. I think that was in the 90s. And now what we have is basically a smartphone in literally every hand. And I think there are more smartphones in the household than there are people in the household nowadays. So I think naturally, when it comes to AI, it's important to understand that the landscape is that you have thousands of companies out there trying to build and train their models actually more economically. And after all, the company that kickstarted off this whole thing is OpenAI, and that was once a startup as well, and just only a few years ago. So that being said, I don't believe the rules of the game will necessarily only be driven by who can produce the cheapest AI solutions. I think over time, what we will see is that the market will likely segment into different levels of sophistication and as well as price brackets. And I think you have various types of users and problem-solving use cases. So I think the market will grow into that kind of segmentation. So I think over time, once again, instead of a monopoly, like what most people are led to believe, by, for example, the Mac 7, we should actually expect AI leadership to spread across various stakeholders.
Okay. Now, going back to the Singapore stock market as usual, Desmond, how did the STI fare today? Any surprises when it comes down to the biggest movers, specifically Singapore's data center Reits? Because I understand they were down yesterday on the back of concerns that AI capabilities could now be achieved with more affordable hardware solutions with DeepSeek, so dampening the demand outlook for high-quality data centers. How far are you agreeable with that?
I think we need to take a step back and look at the big picture. So while AI chatbots like ChatGPT and now DeepSeek popularize what AI can do, and there seems to be an apparent race to who can do it more cheaply, right? Or more economically, to put it nicer. But AI is really not only about chatbots and large language models. AI is a huge field, and there are many different types of AI and application and use cases. So I think it's fair to say there is indeed an arms race right now for chips to power the whole AI value chain, right? And I stress it's not only about chatbots and large language models. So I think over time, we will require more so-called less sophisticated chips, as well as more sophisticated chips for the whole value chain to work. And I think there's also the element of data centers being critical to national infrastructures. Economies are becoming increasingly digital and rely on digital or on technology. And as they say, data is the new black gold. So I think in short, the demand for high quality data centers will actually remain very robust.
Okay. Now, we're just tuning in when in conversation with Desmond Chua, investment counselor, Citigold Private Client at Citibank Singapore. Well, Desmond, zooming in on the counters to watch on the SGX, we do have DBS, the bank announcing yesterday that it acquired an additional stake in Shenzhen Rural Commercial Bank, increasing its stake from 16.7% to 19.4%. Now, I know you do not comment on specific firms, but generally speaking, how significant are such moves for major banks?
Yeah, for the long term, these moves are definitely strategically significant. I think if you look at the local banks, Singapore, for one, is a relatively small domestic market. So ultimately, organic growth will be constrained. So by, expanding stakes in regional banks, our local banks can access larger and faster growing markets. And besides growing revenue, this also helps diversify revenue generation across various geographies and client segmentation.
Okay. Now, finally, before we let you go, Desmond, the U.S. Federal Reserve is set to announce its latest rate decision Thursday morning as we celebrate the Chinese New Year holidays. Now, markets are almost certain, the last I checked, that officials would hold rates this time around. But really, what are you expecting?
Now, as of this morning, you are right. Fed funds futures look like, they're pointing to no change this coming Thursday. But I think they look like they are pointing to a 25 basis points cut in June, right? But even so, this is only a 45% probability, so not very high. In other words, I think the Fed funds rate, as futures are pricing them now, would likely stay pat for at least the first half of this year. Now, regardless, the fact that the Fed is actually slowing the path of cuts actually indicates the US economy is on a very strong footing. So ultimately, we do expect corporate earnings growth this year, and this is actually good for equities.
All right. Thanks so much for the insights, Desmond. That was Desmond Chua, investment counselor, Citigold Private Client at Citibank Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.